Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition of Market Today where our focus is on the Q3 earnings. The company on our radar right now is HDFC Life Insurance that has actually reported its numbers. The standalone net profit has come in at 315 odd crore rupees for the third quarter of FY23, and there's been a rise of 15.2% from a year ago period. Now, to discuss more fine print about the earnings, I'm now joined by the top management of the company. Vibha Padalkar joins in. She's the Managing Director and Chief Executive Officer of HDFC Life. Thank you so much for taking the time out for this discussion. Well, first up, congratulations on this good set of numbers that you've reported. Your own take, was it in line with your expectations or better than your expectations? And also, what were the key factors that really supported the bottom line first?
As you know, we were the first ones in the life insurance space to do a M&A, and we had guided the street that we will be margin neutral about a year down the line, but very happy to share that we are already at margin neutrality, which means that the combined entities margins, new business margins are in line with where we were last year, and from here on we will continue to build that upwards. So slightly ahead. Apart from that, very happy in terms of whether it's in top line. We have grown faster than the sector at 17%. And all the elements of growth, our agency channel, their share has grown from about 14% to 18%. Annuity has trended upwards about 60%. Protection sequential growth has been about 13-14%. Credit life has grown upwards of 50%. And hence, because of all of this, this has not surprisingly resulted in fairly healthy margins and also a healthy PAT, like you mentioned, of over 15% growth.
Absolutely. Ma'am, let's also talk about the net premium income for Q3. That's also risen by about 18.5% right here. Could you share more trends on, what is the kind of renewable premiums that we've seen and the single premium as well this quarter?
Absolutely. So our renewal premium continues to be healthy on the back of high levels of persistency at about 87%, and you'll see close to a 20%, 19 to 20% growth in renewal premium. Credit life, like I mentioned, has grown very well, about 52% growth in credit life business. Our regular premium also, like I mentioned to you, grew about 17% on a standalone Q3 basis. So all of this contributed to a fairly robust growth in total revenue, which is all inclusive new business plus renewal.
Yes, so in fact, I was coming to the new business. So the value of new business and the VNB margins and the outlook on both, if you could share.
So we've had a steady upward movement, like I mentioned to you, in terms of the new business margin reached margin neutrality. So on a standalone basis, 26.8%. That's where we were last year, standalone HDFC Life. Now on a combined basis, we are at 26.8%. And on a year to date, for the 9 months, we are at 26.5% on a combined basis. While on a standalone basis, we were at exactly that number 9 months ago, 9 months of last year. And this has resulted in a overall growth in value of new business at 22% for the 9 months and 26% for the quarter.
Okay. Also, in terms of the product mix, how has been the overall performance for, say, ULIP, protection, par and non-par? Has it been a well-rounded performance that we've seen, or some segments are doing better than the others? And going forward also, what could be the key growth levers for you in terms of these products?
We are continuing to hold on to our key strategy of a balanced product mix and very much in line with that strategy. That's how we've seen the quarter. So we've seen a non-par guaranteed products continuing to do very well, even the shorter end of the tenor, which is Sanchay FMP. Annuities, again, part of the non-par portfolio, but annuities, like I mentioned, we are the market leaders in that. We have a market share of 13% when overall the growth was very, very tepid. It was flattish growth for the sector, and we've grown well against that. So that also contributed. All aspects of it, little bit of softness that we've seen in unit linked, perhaps given somewhat of a volatile situation at the macro level. But otherwise, we are seeing very similar trends to what we saw in the first half of the year. Protection also, like I mentioned, sequentially has grown about 13%. So while early days, but we are hoping that trend also continues or picks up slightly.
So, do you expect the softness in ULIPs to extend in the current quarter, January to March quarter as well?
I would expect that because I'm expecting some level of volatility to continue in the markets, and also given Fed and their position on where are they in terms of interest rate stability or hikes. And so some of that interconnectedness, as well as some of the global situation that is still festering, would have an impact on our markets. Also, the valuation per se, also some of our neighboring countries continuing now to be a new destination for investment after some level of hiatus. I think all of that would mean that I would expect some level of volatility to continue.
Sure. Also, could you give me a sense of how the new initiatives from the IRDAI on the Bima Sugam portal are likely to have an impact on the private space?
On Bima Sugam, we mentioned that we are extremely supportive. In fact, an idea very similar to that was there in the Development and Penetration Committee report that I chaired and was submitted to IRDA. These were part of 8 committees that were formed as suggested by the IRDA. So it's a great idea. What this does is really it's like a farm to table concept wherein one can have the manufacturer directly reach out to the customer either
Sure.
directly or via an intermediary. And we're hoping that this is in a way a UPI moment of the insurance space. So very, very supportive as this continues to gather steam.
Okay,
And
and
there's some
how?
of the
Yeah.
others. Sorry,
Yeah.
there's some of the others as well that have been in the works.
Okay.
And there is expenses of management. There are other things also that finance ministry has proposed, whether it's composite license possibility or a possibility of insurers distributing other regulated products the way banks today distribute insurance and mutual funds. Why can't we also sweat our assets so that we can take the products directly to our customers? For us to invest in a step down subsidiary, it could be an insurtech, and many, many such very progressive and forward looking changes that are in the annual.
Okay, we'll look forward to any of those developments as well. But let's coming back to the earnings front. You recently acquired Exide Life as well. So how the synergies playing out, and any of those numbers coming through in this quarter or in the future quarters that we can expect?
Absolutely. So, like I mentioned to you, the margin neutrality is
Yeah.
because of the synergies, and these are synergies both in terms of distribution. So today, Exide Lives or erstwhile Exide Lives distributors have access to HDFC Life's products and through our platform. So that is clearly accretive. Also, some of the partnerships are now enmeshed with the HDFC Life brand and technology and products, as well as the cost synergies. So there is a fair bit of overlap between Exide Life and HDFC Life in terms of the branch network. And to give you a sense, we had about 383 branches. They had about
Yes.
204 branches. So in total of about 587 branches. So out
Yeah.
of that, 140 branches have been identified, not just theirs but also ours.
Okay.
And to see how can we rationalize, because they might be on two ends of the same road or in the same vicinity and so on. So this is just low hanging fruit that is done and dusted out of the way, and which is why the extraction of some of these synergies is very much underway.
Okay. In terms of the overall market share and in the private space too, what is the market share that you currently hold, and how do you plan to grow it further?
So we hold a market share this year of 15.8% in the private space. We've been a consistent amongst the top 2 in the private space and top 3 overall. And we expect that sort of a ranking to continue despite intense competition. We've also been ranked number 1 in the group space, in the private space. So that's something that we are proud of. And group also has Credit Life in it, which is also very close to our heart because it is nothing but pure protection coverage on a group platform. And we believe that we are the market leaders there. The numbers seem to indicate that as well. And we hope to piggyback on disbursements by our partner lenders, whether it's banks, NBFCs, MFIs, and so on. And that certainly is fairly robust, just given the lending environment.
Yeah, in fact, I was going to ask you that any more banks that are being tied up with as bank assurance partners channels as well?
Yeah, we're delighted to announce our latest partnership with AU Small Finance Bank. We're very, very honored to have embarked on this journey together. And just given the number of their customers, their hunger, their strength in terms of execution, and so on. So we expect this partnership to go from strength to strength. Last quarter, we had shared that we tied up with the post office payments bank and which is a India Post, and that too, that relationship now has is starting to get embedded, as an insurer within their ecosystem, and we expect to to see that relationship also taking some level of traction even towards the rest of this year. And there
Okay.
are some more in the pipeline which we'll talk about as they fructify.
Okay, we will wait for that also, ma'am. But overall, can we really say that, now that what are the trends that you're already witnessing, 20th of January already here, in January, and for the entire FY23, can we safely say it's going to be a good growth year for HDFC Life?
Yes, it's going to be a holistic year, good growth in profitability, very steady in terms of quality of business, in terms of persistency.
Okay, and you also mentioned in your press release that there will be some global headwinds in terms of the economy. So, how are you assessing the potential impact on the entire insurance industry in India in terms of the slowdown concerns or the recessionary fears that we are looking at on a macro perspective? How could that trickle down here?
And that's why we have stated this as a core strategy, that we have to have balanced distribution and balanced product lines, because it's precisely this volatility which is now almost something that we are used to working with as business leaders. And so we don't really expect it to materially impact us, because if there's some volatility in one part of our business, there are enough levers that we have to be able to quickly press the pedal on some of the other distribution partners that we have, or different kinds of products that we that cater to a different set of people, for example. So nothing that is specific that we don't see today. COVID, of course, is always there lurking in terms of the uprising that we're seeing in other parts, especially in Asia. But there's nothing right now that we are seeing that should be a cause for concern. At this point in time, our claims are very much within actuarial assumptions, and we have delivered a positive outcome on mortality variance.
Absolutely. Well, on that note, thank you so much, Ms. Padalkar, and thank you so much for taking the time out to discuss all the fine print of the earnings. And here's wishing you all the very best for the coming quarters, and hopefully we'll get to chat more about the business and the outlook going forward too. Many thanks.
Thank you so much for having me.
If you like the video, do like, comment, share and subscribe.